Yep, the price of gold, it has soared to over $4,000 an ounce for the first time ever, with silver also making unprecedented gains. Experts say geopolitical and economic uncertainty has sent investors flocking to the safe haven of precious metals.
Gold has never been so expensive. America's budget crisis has sent investors on a gold rush. Many big economies are under pressure to slash interest rates. The feat that could stoke inflation, combined with a heavy debt load, is also pushing people towards safer investments.
We have global crises, we have trade conflicts. Naturally, people look for something stable, a safe haven, and that is gold. It's no longer as it used to be. The American bond market, on the contrary, due to America's excessive debt and also escapades of the US government, the safe haven is now closed. And here we see that especially the Chinese, but also emerging markets like to rely on gold. The motto is gold never disappoints. Gold has no default risk, and gold will still be valuable tomorrow and the day after tomorrow.
The yen slide is another factor. The woman expected to be Japan's next prime minister, Sane Takaichi, is promising more government spending and loose monetary policy. With the yen losing its role as a safe currency, gold looks even more appealing. After weeks of steady gains, gold prices have jumped again in recent days. Since January, it's up around 50%. And analysts are betting on more to come. Goldman Sachs expecting gold to edge near $5,000 by the end of next year.
We
still have very high levels of debt, and central banks are no longer taking the fight against inflation quite as seriously because they need to keep government debt affordable. That means that inflation eats up the interest on loans, leaving nothing of your money in the end. So the last truly safe haven in this world, apart from stocks, is gold.
Central banks are still buying to shore up their currencies, especially in emerging markets where demand for gold remains strong.
All right, I'm joined now by Sandra Navidi. She's CEO of the consultancy firm BeyondGlobal, which is based in New York City. Sandra, it's good to see you. You know, we live in a world where Bitcoin cryptocurrency is floating around at well over $120,000. And then you have old-fashioned gold climbing to $4,000 an ounce. Help make some sense of this for us.
Well, gold has traditionally been considered as a safe haven, especially in view of economic instability and uncertainty and geopolitical crises. We're seeing a similar trend with regard to Bitcoin. Gold and Bitcoin haven't historically been correlated necessarily, but more recently we've seen similar moves. That all points to the fact that investors globally and also central banks are seeking a safer asset in gold.
And are we also seeing seemingly unconnected events such as the government shutdown in the U.S., the likely incoming prime minister of Japan, the conflicts in the Middle East and Ukraine? Are they all having an influence on the price of gold?
Yes, what we're seeing is that the world becomes more unpredictable and uncertain, and that's something that investors traditionally don't like. Now, we're seeing also that the three major rating agencies have all downgraded the United States in the last few years. And that was due to the fact that they've seen political instability and institutional dysfunction. So we're seeing that trust in the United States and the dollar as a safe haven is diminishing. We've also seen capital outflows out of the United States. And that all points to the fact that investors are seeking other safe havens. And then, of course, we have a president in Donald Trump who's not exactly a stable genius. And we're seeing he's causing a lot of headline risks. Tariffs on, tariffs off, deportations, military in the streets, no more HB1 visa. I can tell you that behind the scenes, investors and CEOs are very worried. Many are concerned and are reluctant to voice their concerns. And we've even seen analysts are basically saying, I can't tell investors the whole truth because we fear repercussions against our companies. So there's a whole slew of factors that makes investors very worried and seek refuge in gold.
Yeah, I mean, that certainly gives new meaning to the term that we all know of the Gilded Age. It sounds like what you're describing there with the U.S. president. I'm wondering, Sandra, what does this record-setting price of gold, what does it mean for people who aren't even dreaming of investing in gold?
Well, the reason why gold has this safe haven status is that it has cultural, historic value, and also a very great emotional component. Now, in countries like India, it has great cultural meaning, dowries invested in gold. And then we've seen in Russia, in China, central banks have increased their holdings in gold primarily to lessen their dependency on the dollar. We remember the fact that Europe and the US have frozen Russian assets, dollar-denominated Russian assets. And so now maybe they will even confiscate them. And that has other countries worried that if they have too much invested in dollars, it could also be confiscated if there were a crisis to come up. So they have increased their dollar holdings and then also contributed to increased demand in gold, which puts upward pressure on prices.
And you know, we don't want to ask you for stock tips here about investing, but I know that investors are saying and predicting that gold will keep going up and may even touch $5,000 an ounce. So at $4,000, is it still worth buying?
Well, that depends on what kind of investor you are, how long your investment horizon is, and what your risk appetite is. But essentially, what it comes down to is how much are you willing and able to invest in insurance? Because that's what it is. Gold is an alternative currency. We're seeing that trust in fiat currencies, paper currencies, is decreasing, hence the flight into gold. And I mentioned the headline risk. This sentiment, this investor sentiment that puts this pressure on gold prices because everybody wants to go in it. We've also seen great demand in ETFs is contagious. And you previously asked, what is the effect on people who can't even invest in gold? I think all these bad news, bad headlines, and the awareness that now institutional investors are going increasingly into gold is contagious and makes people very worried. And probably influences consumer behavior, savings behavior, and the rest of it.
You know, they say all that shines is not gold. When does this safe haven, when does it become unsafe?
Well, that's impossible to predict. Gold has very limited practical use cases. For instance, in industrial production, it has limited use. Yes, it's put in electronics and medical devices, but relative to other precious metals, that practical use case is relatively small, in contrast to silver, for instance, which has greater usage. So you can see that gold has more of an emotional component, a cultural component. So it's impossible to say how much longer the price will rise. It could also fall. The entry price, I mean, that is dependent on every investor. Like I said, has to make a portfolio decision what they're willing to spend for diversification's sake and risk, as a hedge, basically. Yeah. So I will not predict where the gold price is going, but I think it's relatively stable.
Yeah, well, it's easy to be jealous of those people who invested when it was under $1,000 an ounce, that's for sure. Sandra Navidi of the consultancy firm BeyondGlobal. As always, Sandra, good to have you with us. Thank you.